So what's happening?
Good to be back with you. A lot of things are happening.
Yeah.
First of all, on the real estate side, the news is all good. Lately, it's all good news.
I can hardly handle it after the last couple of years.
I know. When you look at the median price of single-family residences, you look at San Diego last month, it was up 12% year over year when you compare it to the same period exactly a year ago.
Actual selling prices.
Yeah, the median price of previously existing homes, single-family homes.
Right.
Now, when you look at National Association of Realtors for the whole country, it was up 10%. That was the biggest increase since the fourth quarter of 2005. So that's certainly very, very good news.
Yes, but what do those figures mean? In other words, there's no inventory. The inventory's been way down.
That's correct.
All kinds of pent-up demand. Interest rates are historically at the lowest possible point you could imagine. So is this just a little blip, or is this actually the beginning of a trend?
Well, that's the multi-billion-dollar question.
I bet it is.
I don't really think anybody knows, but I will say right now, it's hard to fight the trend. Everything seems to be suggesting that the real estate market is really bouncing back. Like you said, the inventory is not there. A lot more activity on a national level as well as here in California. Interest rates, even yesterday, at least one Fed official, Ms. Yellen, said that it's not even a sure thing that interest rates are going to have to go up if we hit those particular economic targets of unemployment and inflation and all of that. So that was kind of encouraging news for the market. So right now, the government is doing a very good job of artificially keeping mortgage rates down by buying, $85 billion a month, mortgage-backed securities and U.S. Treasuries to keep rates down. So for the foreseeable future, I would say the next 6 months, maybe even more, I think that's going to continue. So even if rates were higher, I think cyclically we've gone past that point where the market is flooded by bank-owned properties. And now that the rates are lower, that's feeding it further, of course.
You're an expert on this, and there were a lot of questions about reverse mortgages. The FHA was going through a whole bunch of announcements and this date and that date, and apparently it's been changed. Bring us up to date on the reverse mortgage.
Yes, since the last time I've been on the air with you, quite a bit has changed. Mortgagee Letter 2013-01. Now, this one finally came out. We've been talking about how by January 31st, all the rules are going to change. Well, on January 30th, they announced, they released a mortgagee letter saying that it's going to be extended till March 31st.
Oh.
So the new rules will not kick in until April 1st. Unfortunately, a lot of people are going to wait till the last week in March. You really can't be doing that because you have to get your counseling done and all of that. But the bottom line, what we talked about a month ago, is going to be taking place by the end of March, meaning that on a full draw, standard fixed rate reverse mortgage, that's going to be, done away with. So people will not get as much money. The rate will have to be a lot higher, a lot less cash, or an adjustable. They're also going to be implementing very, very, very soon financial assessments to see what that borrower's credit looks like, assets, payment history on property taxes, insurance. And so there's also going to be a set-aside for an escrow set-aside for property taxes and insurance, and that will reduce the amount of cash folks get. So the good news, it's very rare that FHA says something and I'm all excited about it, but the good news is they're giving seniors an extra basically 60 days. Now, it's not 60 days from today, it's 60 days from January 30th. So that's a big change coming. And here we go again.
Now, all of that was occasioned by FHA having some problems with this program. And I'm surprised by this because, as I've listened many times to you in the seminars, the seniors who get this reverse mortgage pay an insurance premium.
Correct.
So that the amount is insured and that the investor shouldn't have to lose any money, even if the seniors live to be 150 years old. The house and whatever, the insurance will pay off. The investors. Why are they losing money?
I could tell where you were going the moment you started. I'm well, I'm not surprised.
Yeah, it's the government, I know.
Facetious. I don't think either one of us is surprised. I think it's probably mismanagement, miscalculation. It's the government.
It's amazing.
That old saying, close enough for government work?
Yeah.
There it is, close enough within about $14 billion.
They lost this $14 billion. I couldn't believe it because here's a situation, and you've explained this so carefully at these seminars that you hold, that it's something that is calculated to work over time, no matter how long you live and so forth. You pay the premium. There's insurance.
Correct.
The housing maybe goes up a little bit in value, but very conservative estimates there. What's happening?
You have to really miscalculate. You really have to miss the mark to
crazy.
be off by that much. They're saying their whole insurance fund is like minus 14 billion. And then when you look at the reverse mortgage side, they say it's 2.8 billion. Really, if they've done the math correctly, you know, it shouldn't be off that much. It should be off by just a little bit. Of course, the study itself is a little suspect too. But bottom line, there's this push to...
See, I was going to ask you about this. Now,
Yes.
my little conspiracy mind says
Yes.
to me, wait a minute, they aren't losing money. What they're doing is the money's going out the back door to shore up Fannie Mae or Freddie Mac or someplace. And the government is just trying to shuffle these things around. And then they don't want to take any heat from seniors by taking away this beautiful
Yes.
program. So they say, oh, well, we can't help it. We're losing money.
Correct.
It doesn't make any sense.
Well, I think part of it is there's this push to have FHA, you know, hold less of that, you know, guarantee or insurance and bring the private business into it. So the way they do it is by putting a study together, which is suspect, quite frankly. I'm not sure how accurate these numbers are, to kind of give it a push to adjust things. First-time home buyers, they're going to pay higher mortgage insurance after April 1st. After June 3rd it is, they're going to have FHA mortgage insurance for the rest of their life, basically. Doesn't matter if the home is worth $500,000 someday and the loan is $100,000. They're still going to have to pay the mortgage insurance.
No kidding.
So there's some major changes they're making. The bottom line, if you're a first-time home buyer or any home buyer who's using FHA financing, do it sooner. If you're a senior, do it sooner. All the formulas are tightening. And that's
now,
the bottom line.
Aside, we only have 1 minute left, but aside from FHA, in terms of your commercial
Yes.
market loans, those seem to be going pretty well.
They're going fine. They're going fine. The book of business across the board is healthier than it was before. But that's for people who have a larger down payment, excellent credit, good income documentation. But FHA has to do with either very little down payment, 3.5%, or the opposite, which is seniors who have a home that's paid off or a lot of equity. That's where the FHA financing usually comes in.
Wow. Well, Mehran Aram. Now, anything else we need to know in 30 seconds? I think we've covered a lot
I'd
here.
say that mortgage rates right now are only about 0.25% above all-time lows, so we're still looking at very, very good levels.
Very good levels, and
Absolutely.
they're apparently going to last for some time to
For
come.
a little
here.
while, yeah.
All right. So have we hit bottom here?
I think we hit bottom a while ago as far as
Okay.
interest
So
rates.
people are interested in buying. I think the bottom line is now's the time.
Or refinancing.
Or
anything.
refinance.
Absolutely.
Or reverse mortgage.
Absolutely.
All right. Mehran Aram, thanks for being here. We'll be back with an example of public schools at work.